Universal basic income. You've probably heard the term buzzing around. It's a massive idea, one that gets people really talking. But what would it actually mean for your wallet right here in the UK? Well, today we're going to cut through all the noise and get straight to the facts of how UBI could hit UK taxpayers come 2026. Now, before we get started, I want to be super clear. All the number crunching and the analysis we're about to walk through has been put together by the experts over at My Tax Accountant. They've done the serious legwork to give us a really clear, fact-based picture of this whole thing.
So let's just start with this one question. Imagine it. What if a guaranteed chunk of money landed in your bank account every single month? No forms, no interviews, no strings attached. It's a pretty radical thought, right? That's the core idea of universal basic income, and we're about to break down what it could really mean for you.
All right, here's how we're going to tackle this. We'll start with the absolute basics of what UBI is. Then we'll get into the big one, the cost. After that, we'll look at some proposed reforms. And of course, the most important bit, how it could actually affect your finances. We'll also cover the trade-offs and what this all means for your future.
Okay, first things first, let's get on the same page about what universal basic income actually is. You know, the concept itself sounds incredibly simple, but believe me, the consequences are anything but.
So at its heart, UBI is just this, a regular payment given to every single citizen, no matter what. And the two key words here are universal and unconditional. It doesn't matter if you're working, not working, rich or poor. That's a massive, massive departure from the way our current system is set up.
And this really shows you just how different it is. On one hand, you have universal credit. Let's be honest, it can be a maze of complex rules, eligibility checks, and conditions. But UBI, on the other hand, is designed from the ground up to be simple and automatic for everyone. It's a completely different way of thinking about Social Security.
But now we get to the elephant in the room. The question absolutely everyone asks, how on earth would we pay for it? We're not talking about a small investment here. We are talking about staggering amounts of money.
Right. The Institute for Fiscal Studies ran the numbers, and the result is, well, it's eye-watering. A pure version of UBI would cost over £200 billion a year. Just to put that in perspective, that's more than the entire NHS budget. It's a figure that just makes you stop in your tracks. So with a price tag like that, a pure UBI probably isn't realistic for the UK anytime soon. But, and this is important, that does not mean the conversation is over, not by a long shot. There are other more realistic ideas being discussed. Stay with me, this is where things get really interesting.
Okay, so check this out. Here is a concrete proposal from the New Economics Foundation. They're suggesting a weekly national allowance. Now, how would they pay for it? Well, they'd fund it mostly by getting rid of the personal tax allowance. And that's a huge trade-off, right? A guaranteed income for everyone, but it means you'd pay tax on every single pound you earn, right from the very first one.
So, instead of this radical, tear it all down and start again approach, what if we just made smaller, smarter changes to the system we already have? The University of Bath has looked into exactly that, how we could tweak universal credit, and their findings, especially in light of the new 2025 budget, are pretty fascinating.
Before we dive into that, here's a quick pro tip for you. You're going to hear this term taper rate. All it means is how quickly your benefits are taken away for every extra pound you earn. It's simple, really. The lower the taper rate, the more of your own money you get to keep.
So right now, after the 2025 budget, the taper rate is 55%. That means for every extra pound you earn, you lose 55p in benefits. Now, a key proposal is to slash that down to 40%. For every pound you earn, you'd only lose 40p. That change would mean you get to keep more of your hard-earned cash, which could make a real difference. But it does come with a price tag, about £7.5 billion a year.
All right, we've been talking big picture, big numbers, but let's bring this right down to earth. What does all of this actually mean for you and your family? Let's look at the real-world impact these changes could have.
Let's take someone like Sarah. She's a freelance graphic designer in London, and her income is all over the place. Some months are great, others not so much. With a lower taper rate, during those good months, she'd get to keep more of what she earns. But crucially, she wouldn't lose that safety net for the quiet months. It's all about providing a bit more stability in what can be a very unstable world of work.
Now, this chart shows you the direct consequences of that NEF proposal we mentioned earlier. And it is a very clear redistribution of money. The lowest earning households would see a pretty significant income boost. The middle would get a little bit, but the highest earners, they'd end up paying more. It's a policy that creates very clear winners and losers. And that's the thing, isn't it? Every single major policy change like this has winners and losers. It's a tough reality, but it's one we absolutely have to face. So let's dig into who would benefit from these reforms and who might get left behind. This slide reveals a really harsh truth. Look, on one hand, these reforms could slash child poverty dramatically, which would be an incredible achievement. But here's the kicker. At the same time, they could unintentionally push more elderly people into poverty. It's a powerful and sobering reminder that there are absolutely no easy answers here.
So it really all boils down to a series of incredibly difficult choices. What do we prioritize, reducing poverty or keeping taxes lower? Do we want a simpler system even if it costs more? It's a constant balancing act, and every single decision has a consequence.
So after going through all of that, what's the bottom line? What are the key things you really need to take away from all this for your own financial future?
To sum it all up then, first, a pure UBI is probably a non-starter right now. It's just too expensive. Second, the real conversation is about reforming the system we already have. Third, the key ideas on the table are things like lowering that universal credit taper rate and changing tax allowances. And finally, any of these changes will create a new set of winners and losers. It's a complex puzzle with no simple solution.
And you know, all of this really leads us to the biggest question of all. The world of work is changing faster than ever. Is our social security system, which was designed for a totally different era, is it really fit for the future? That's a question I think we all need to start asking ourselves.
As you can see, navigating the world of tax and benefits is a real minefield. And with big potential changes like these on the horizon, it's only going to get more complicated. That's why it's more important than ever to get expert advice that is tailored specifically to you and your situation.
If you have questions about any of this, or really any other tax issues, the team at My Tax Accountant are the people to talk to. You can call them on 020-857-08531 or just drop them an email at info@mytaxaccountant.co.uk. And just a quick final reminder, all the information today is for general purposes. For any decision about your own finances, you should always consult a professional tax expert. Thanks so much for joining us.